Just to hit on the top three things this morning, number one, the NASDAQ, number two, the commodities index, and number three, the 10-year bond yield. First on the NASDAQ, the good news is that Hedgeye Risk Management didn't have you in anything in the NASDAQ. Actually, we liked Apple, but sent out a sell signal in the middle of last week. But again, the social media bubble is imploding, and now what we have here is, number one, a 5.3% drawdown in the NASDAQ itself. But more importantly, and this is the most important point of this morning's top three things, the NASDAQ has broken its intermediate term trend line of 4203 support. So again, that is a very negative signal. It came on accelerating volume. And again, you can get above the line, you got to hold above the line again. We'll have to see if that happens today. It doesn't look like it's going to happen this morning. Again, don't call them momentum stocks. Call them bubble stocks. It's okay. Commodities, on the other side of that, continue to act famously, really. If you look at the CRB index, how did the CRB index act on Friday? On Friday, obviously, the NASDAQ was down 2.6% on the day, and the CRB index was up 0.6% on the day. CRB index up almost 9% for the year to date. CRB food index up almost 20% for the year to date. So again, if you're going to be long something, be long inflation accelerating. That's where the smart money is getting paid. And again, money's only smart if it's getting paid. So again, look at that for what it is. And then finally, the read-through to the bond market is that commodity inflation continues to slow growth. So the 10-year bond yield tested and tried 2.81% last week, which is, of course, our trend line of resistance, and it failed there. This morning, 272 and falling. No support on the 10-year bond yield to 266, and then 2.54% after that. So those are your top three things.